the real estate market has been anything but normal. If in honestly, in the many years we've been in the real estate business, it's never normal, right? I think that's
It's always changing.
one of the things, I think I kind of enjoy about the real estate world is that, there's always something rolling, right? There's always something changing and evolving in the way we do business, and just the market dynamics are very fascinating to me. But right now we are in an extraordinary time in the real estate world. And so there's kind of 5 things that we identified as, that make it very different than air quote normal. Yeah. And so, first off, Tracy, you want to take that first one?
Well, the first one is the mortgage rates. So when you look at 30-year rates by Freddie Mac, you can see the averages by the decade, Tego. Yeah. And it's interesting because we're on year 8, right, of being on the radio. And I think back to Eddie's first studio where we would go. Yeah. On San Pedro
Carlisle.
Anyway. San
Pedro.
Pedro.
Yeah. I don't know.
Anyway.
Okay.
And what we would be talking about, because the rates were probably in the high 5s. Yeah. Or 6 something.
No, I don't think we're ever in 6, probably in the 5s. Yeah.
Yeah. So in the 70s, the average was 8.86.
Right.
The 80s, 12.7. And we know that it spiked a lot higher than that.
Like 20. Yeah.
Yeah. I remember, I think I've told this story before too, how my sister, I think it was 1982-ish, where she slept overnight in front of a bank because they were going to be releasing first-time buyers money at 12% interest. And she slept overnight to get that 12% interest. And it was regularly like 18 then, or 16 or something. And, think about that now. People should be sleeping out overnight to get this 3% interest. But anyway, that was the 1980s.
Yep.
1990s, the average was 8.12% for
my
mortgages.
First house I bought was in the 90s, and I think it was around 7%. I was thrilled to get like a 7% mortgage. Again, this was in mid-90s probably.
So the 2000s, the average was 6.3%.
Yep.
So when I first started in real estate, Tego, back in 2002, way before you, by the way, interest rates were routinely around 7.5%. That's what we were seeing all the time. And at that time, at 7.5%, most sellers were contributing 1% towards the buyer's down loan so that they could buy it down or buy points to get maybe a 0.25% better rate, a whole 1% of the loan amount, or they were contributing. But that's the 2000s, 6.3%. 2010s, our average, 2010s.
The 10s, yes.
Average 4.09%.
The aughts. I've heard it called the aughts.
The aughts. So just over 4%.
Right.
And let's think about the 20s, right? The 20s aren't on the chart.
No, but we're in that.
2020, 2021, we know we're sub 4, closer to 3 most of the time.
Well, we've been hovering 3% plus or minus for, almost 2 years now.
And right now it's back to those lows of typically just under 3 for somebody with decent credit, right?
So that was a long way to say that the one thing that makes this real estate market very well. I think
we've got 5 points. I just spent our whole show talking about
I think the perspective on mortgage rates is really important. And I know, people say 3% money, that doesn't make any sense. It's crazy. And, it's lower than inflation. We don't want to go down that road. We're not going to go down that road. But more than likely, interest rates are lower than inflation.
So point number 2, home price appreciation.
Yep. So you put those two things together. You look at the Albuquerque market. We've seen appreciation in our market, depending on what you look at, anywhere from 14 to 17% annualized when you look at a 12-month rolling. And that is extraordinary because historically home prices run anywhere from 3, maybe 4% is kind of the number that would be an ideal situation because it's still ahead of inflation, but not too far ahead. So there is some concern about how much home prices have gone up in the last year. And honestly, there is no indication of that slowing down. It does appear that home prices are going to continue to go up just because the supply-demand ratios are so
So,
tight.
Tigo, we should do a show on the Santa Fe and Los Alamos home prices maybe next week.
Okay.
Because I think when you look at it, their appreciation is actually up higher than the Albuquerque metro area.
Well,
I've seen
got
numbers
some
as
data.
high. Yeah.
Yeah.
Well, let's save that because I think, Eddie's station goes to Santa Fe and Los Alamos. Let's do that next week and talk about those markets specifically.
So let's get through these 5 things.
Yep.
If
So
we
one
ever
was
get
mortgage
through-
rates, 2 is home price appreciation.
Yep. The other thing
3,
that makes it not very normal is the thing I just mentioned is the supply of homes on the market. Very, very low supply. Just looked at the August data, and we are in overall in our market, we're at 0.7 months supply, which is a very, 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 just extraordinary low number of homes available to purchase compared to historically a quote balanced or healthy market should be somewhere around 5-6 months supply, and we're at 0.7, and that's in all price ranges. If you get down in the 200 to 400 price range, which is the really the sweet spot in our market, it's more like 0.5, so 15
or
days
less
supply. Yeah.
And so number 4,
Yep.
the days it takes to sell a home is very out of the ordinary, wouldn't you say?
In Albuquerque, median days on market in August with 4 days.
I love how you know a stat for everything. I throw out a headline, you know a stat.
So
4 days.
So what that means is 50% of the homes that went on the market in August sold within 4 days. The other 50% took longer than 4 days. Average days on market was right at 17. Oh man, see now I blew it.
I threw you off your game, huh?
I don't have it in front of me, but I do have it right here. Average days on market for August was 12 days. 12
For
days.
the whole market.
For the entire market.
So 50% of them, though, were 4 days or less.
Yeah, so days on market, again, extraordinary, very different than any historical data.
Right.
And then
the fifth thing, the number of offers per listing.
Yeah, so Tracy hit on that one. Back in the early summer, we were seeing some crazy things in our market, like 20 offers on homes.
Yeah. I definitely worked one where I had 21 offers and 2 more came in after we'd already decided on somebody. It was crazy. 21 offers to sift through all the bullet points and help the seller determine which one was going to be the most stable and best one for them. That was a lot. I think now what we're seeing, Tego, is still multiple offers, but not as many.
Yeah,
right, as we're going into fall.
Absolutely, and I hear people in the real estate business saying, "Oh, it's slowing down." It's like, well, yeah, it's slowing down. It went from insanity to just kind of really busy.
Well, and it's typical this time of year. We'll talk about that, but it's typical. So there you go.
So anyway, those are your 5 reasons that the market is very different than it's ever been before.